Hello, everyone. Welcome to the market update for Tuesday, June the 28th. If you have any questions during the week or any questions I don't get to in the live class here, make sure you send those to Jerry at traderspro.com. Obviously, we've seen a little bit of a market rally over the last couple of days, and that's alleviated the oversold condition. Again, if you went back about a week or so, it might have been more than a week, but we were looking at some extreme conditions on these direction alerts, and that's what we're looking for. We're looking for extremes on this first part of the update. This is you're looking for extremes. Are you in an extremely oversold or overbought condition? Because you don't want to be buying a lot of stuff in an overbought condition. You don't want to be shorting a lot of stuff in an oversold condition if you're shorting, or if you're in an oversold condition, that could be a good sign to go find quality stocks, high strength ranks, stocks that have been outperforming, because if the market starts to rally, those could rally along with it. So that's why we look at these things. The long-term signal is still flashing the bear market, and it is at an extreme. But as I mentioned before, just like we overshot to the upside of the bull market by quite a bit, we could do the same thing to the downside, where we get to some of these extreme oversold levels, or extreme levels to the downside in the bear market. So, but that's still flashing a bear market. Momentum, again, this was, and again, I can't remember it was near the bottom, so you can go back and look at the chart where the bottom was, but we were all the way over the left side right here on this extreme range, and now we've moved with this recent rally, we've moved up into this hold range right here. Now, what this is telling us is obviously we've moved off that extreme condition. We're no longer oversold in the market. But what we want to look at then when we go to the charts is, okay, is the S&P chart acting like, is the rally that alleviated this oversold condition, is it acting like just a correction within the downtrend or a trend reversal? So that's what we're going to be looking at when we get to the chart is, okay, is this the start of a new uptrend? Possibly moving out of a bear market back into a bull market, or is this just the bounce or the rally, a bear market rally, a rally within the downtrend, and we have a little bit further to drop? And we'll look at some of those possibilities when we get to the S&P chart. But if it is just a bounce and we could end up going lower, this is saying that we've alleviated that oversold condition enough to where it could start selling off again, and this could move back into that oversold range. And the opposite, if the rally continues and we start breaking above resistance levels, that maybe it eventually becomes overbought, where it reaches that extreme. And I don't see us getting there. We're not going to get to these levels unless we are truly breaking out of the downtrend and starting to clearly look like we're starting a new uptrend. So that is a good, if you're looking for a real simple sign that maybe the bear trend is over, the downtrend is over, you can just wait to see if momentum gets into this extreme range or the very high side of this buy range here, and that could be a signal that we've moved up far enough, probably breaking above significant resistance levels to look more like a trend reversal. But having said that, we still want to look at how it rallies, those trend characteristics that I've taught you and we talk about all the time. Is the rally looking more impulsive, or is it looking more corrective? Corrective would be more choppy or sluggish. Impulsive, it would look like really committed buying, confident buying that's taking place. Those are things, other clues that we would look for there. The breadth indicator hasn't moved up as much as the momentum. What this is telling me is that there's fewer stocks that have led this recent rally. There's not a large participation of stocks in that rally. Now, why is that significant? Well, again, if this is a start of a new trend and a strong new uptrend, you would see broad-based participation. A lot of stocks would be participating. You'd see really good breadth in the rally. We're not seeing that now. Typically, when you have low breadth in the rally, it is more of a bearish signal. It means there's just a handful of stocks that people are piling into. Those stocks are typically bigger companies, so they're causing the indexes to look good, but the overall health of the trend is really not there. Now that can change. You can suddenly have that participation kick in, we're on a spot, an area on the chart where if we start breaking above some of these levels, I'll show you the chart here in just a second. You could see that more participation come in, that breadth come in. But really, the way things are behaving today, and the fact that there's been that lack of breadth in the rally, again, that's more of a bearish signal. I'd lean a little bit more towards the probability that we're heading lower. Maybe not immediately. I also want to address some events that are coming up and dates that are coming up we need to pay attention to, because what we've seen a little bit in the last few cycles is because so much focus is on these inflation reports and these Fed meetings, that the market is tending to wait until those meetings or those events take place. And in the meantime, in between, it tends to be a little bit more choppy or sideways or sluggish or just sideways, not going anywhere in a strong direction. And so, we want to be aware of when these dates are, because we might see that volatility pick up a little bit, or that movement in the market pick up a little bit, particularly after these events take place. And then, of course, the breadth indicator is still in this high complacency, complacent area here. Not in the extreme, but it's still just remained elevated. We really need to get a sell-off that kicks this out of this range. It's been in this range right here, somewhere in this range right here for a very long time. Even on some of the recent sell-offs in the market, we haven't been able to get into just even in the trending range, not to even mention into the fear range. I really would like to see a big enough sell-off that does kick us into this fear range. And I've mentioned that a number of times. And we'll talk about a little bit about that when we talk about the VIX coming up as part of our market update. Now, buy-sell ratios, the sells have come down, buys have moved up. We've alleviated that extreme condition as well. Now, the buy-sell ratios of the entire market, we're still below 1. We're at 0.63. We'd like to see that to get above 1 before we would really start wanting to add a lot of stocks to the portfolio or get a little bit more aggressive that way. Again, the reason for that is that you want to have a lot of stocks participating. Okay, this kind of gets back to that breadth argument. When there is a lot of participation in the market, it becomes easier to pick stocks and to have success. If you've got just give you and I've probably used this before for those of you that attend each week, but for those that are new, let's say you have 1,000 stocks, and on an up day in the market, 50 of those stocks are up. Maybe up really well. A lot of the other ones are maybe barely up, but there's only like 50 stocks that are up a decent amount. Well, what are your chances out of those 1,000 stocks of grabbing one of those 50 stocks, of actually picking one of those 50 stocks and profiting from that? Well, it's pretty low, right? It's almost like if you did have success, it was pretty lucky. Now, let's say you get a market rally, and out of those 1,000 stocks, there's 500 of them that are moving up pretty well. Okay, a lot of making pretty decent moves or pretty big moves. Okay, now what are your chances of getting one of those 500 stocks and making money with one of those 500 stocks? It is obviously greatly improved, right? You're most likely going to make money. It almost doesn't matter what you pick. Whatever you pick is most likely going to move up. Okay, so and what'll happen in those conditions is it'll feel like it's easy. It feels like it's easy money. You'll feel like a genius. Man, I picked this stock, it went up. I picked this stock, it went up. I picked this stock, it went up. When really, in reality, if you understand what's going on, it's just that your odds of success were greatly improved because you were trading at a time when there was a lot more participation in that rally. So when the conditions are down and there's only those 50, in this case, it'd be more like 20 stocks that are maybe up out of those 1,000. Your chances of picking, even if you're looking at strength rank, your chances of picking the one of those 20 stocks that are going to move is pretty low. And so we like to kind of be on the sidelines, more on the sidelines when that ratio is below 1. I mean, we're not at this point, we're not looking at massive participation yet, but we want to see improvement. We want to see at least a minimum area where those odds are more stacked in our favor, where we can find when we're finding those high strength rate stocks, they're more likely to continue to move up. And that's kind of that border that minimum target that we're looking for, and we're below it right now. So that's, if you're wondering why I don't have a lot of stocks in the portfolio, I'm going to add a couple today, and I'll explain why I'm doing that when we get to that point. But if you're wondering why I'm not loaded up, that's one of the reasons. And I'm still waiting for that panic sell-off to take place to feel like we're at least very close to a bottom before I start adding. I'm not trying to pick the exact bottom, but I want to see at least that minimum. Because what will happen is you'll get a panic sell-off, and you don't necessarily rally straight up from that panic sell-off. You go back and look at 2009 when we bottomed. 2000 and in 2000 when we had the internet bubble that burst, and when that bottom formed, you got the panic sell-off, and then you almost got a relief rally off of that, and then kind of a bottoming process where you kind of bounced around a little bit and then started to rally. So it does take a little bit of time. You don't usually bottom in a day or two or something like that. Obviously, in hindsight, you go back and look at that. But you want to kind of get that flush out move, because that's when you know you're really close, and then you can start to add some things that you can start to manage at that point, and then you can increase it as the trend continues to move up at that point. So that's kind of what I'm waiting for to get a little bit more aggressive with the portfolio. Sentiment indicators right in the middle here. Again, it's just showing it's alleviated that oversold condition. And that's basically what that's telling us there. Let's get to the charts. Now, what's pretty amazing is the kind of the support resistance levels I've been looking at. And if you go back to some of the past classes, what I identified here on the S&P was this being a critical area right in through here, and this right down below here. I had a little bit of a resistance zone, okay? And in fact, you can go back to the Thursday update, and we were right here. We're right at that area right there. And I said we're at a resistance area right here. We'll see if on Friday, if the market were to show what you're looking for, some sort of bearish reversal candle in that area there. Well, obviously, we didn't get a bearish reversal candle. It broke right through it, gapped up. So that's a little bit more of a bullish sign when it can do that, break out above that level right there. But look where it closed on Friday. It closed right at that second resistance area. Remember, I was looking at this as a zone or area. I don't like to always look at exact spots, because the market doesn't always move in an exact way. But it stopped right there, and where I got this trend line right here was back here on this drop. it closed the day right here, and then it gapped down. Now, what will happen a lot of times is when the market starts moving back up again, it'll fill in this gap. It'll trade within where this gap area was. And that's what happened on Friday. We filled that gap all in one day right there, where we moved up. We traded within this area. Now, it also corresponded to a few opens and closes right into here back when it was bouncing back and forth right into here. So it went right to that spot. Yesterday, we had a bearish reversal candle. And then today, we actually tried to punch through it, and it failed. We gapped up. We tried to push through it. Looked like the market was acting strong early on. Then it reversed it, came all the way back down. Boy, anytime you have the market up like that early and then it reverses like this, especially if we end up closing near the lows today, that's going to be a pretty strong bearish signal. Now, we'd want to see if the volume is behind it as well. But, and we have to, what's also worth noting is that if we close where we're at right now, all we're doing is closing basically still inside of that zone. But now we have a pretty strong reference. If we close around here, which we may do, unless you really see some panic into the close, and that definitely would be something I'm looking for. And we break below this 380 level right here, that would, if we do break below this, whether we do it today or tomorrow, that's very bearish. That means we're probably heading lower, probably going to go to a lower low, maybe not immediately, but we're probably heading that way. It's possible though that we find a little bit of support here. Looking at the charts, I'm not seeing any panic selling. I'm not seeing any huge volumes just yet on that reversal. So there doesn't seem to be, the VIX isn't spiking up in a huge way. It's up to as you would expect it to be, but not anything that would signal a lot of concern with that reversal so far today. So maybe it holds in this zone and breaks out. If it does break out above here, that would be more bullish, okay, at least temporarily. The next area that you would look at then is this gap, which is right around 400. Right in here. Does it fill that gap? And then this would be the next resistance area. Now, this is really the last spot right here. If we are going to continue the rollover and drop again, this is probably as far as I'd want to see it rally, because if it rallies and breaks above here, that was a lower low or lower high that was followed by a lower low. If you break above that, now you've got a higher high, and that could be a signal of a trend reversal. We'd have to at least look at the possibility that, maybe the market has bottomed down here and we're in a new uptrend. We're starting a new uptrend. We'd at least have to look at that. Again, it still would be hard for me to buy into that as this being the bottom, but again, as trend traders, I'm not trying to be a psychic or be prophetic. I just want to follow the trend. So if the trend is acting like it's continuing to move up, I've got to kind of follow along with it at that point. So these are the key spots that we'll be watching. Like I said, today's price action was very bearish, but it doesn't necessarily mean that that it has to drop or go lower. It might need a little bit of a catalyst to do that, and I don't know. There really hasn't been anything major today that I'm aware of that I would put in the category of so big that it's going to cause panic selling. But there are some events that are coming up here pretty soon that could trigger that. But because it's not immediate, maybe, like I said, it wouldn't shock me if maybe this doesn't last, or maybe it comes down a little bit further. Maybe this is just wave A, you get a wave B and then wave C, and then you drop something like that. This could just be a wave B drop within the correction. but again, it is pretty interesting that again it stopped right at that area right there, and then had that reversal today. So that's what we'll be watching on the markets. Again, most of the other markets are kind of acting the same. You're not seeing you'd like to see a little bit of you'd like to see a little bit of a outperformance to the downside for the Russell. That was another thing too. Yesterday, the market had a bearish reversal, but look at the Russell. The Russell didn't. It had an indecision candle right there, but it was actually holding up pretty well. And so usually it's out leading the way. Usually it's having the worst day, so to speak. Now we could make the argument that maybe that's happening today. Let's look at the percentages here real quick. Russell is down 1.34%. S&P, actually S&P's down more. Nasdaq's down over 2%. That's a bigger drop there. But the small caps have actually held up. So maybe that's another reason to be, a little bit skeptical on the drop today. But more has to do with the VIX. The VIX hasn't really spiked up proportionally in an unusual way. We'll look at the VIX here in just a second. Moving on to bonds. Bonds have had a little bit of a pause here. We were looking at this as just being a correction within the downtrend, similar to this back here. We started to move lower, but now we're pausing right here. It could be very similar to back here, where it kind of chopped around a little bit. It started to move down right here and then went back up again. It could be that this is just wave A, wave B, wave C, and then heading lower. So we'll see over the next couple of days what it does there. But overall, we're assuming that trend is still down. We would have to get above this high right here to have gone to a higher high. So if we rally up above that, especially if we go really impulsive above that, then we could start talking about a potential trend reversal. But haven't really seen anything in the bond market to assume that it's going to reverse that trend just yet. But we'll definitely point it out when we see it starting to take place. Gold had a real simple approach with gold. We said if it breaks above here, that would be bullish. If it breaks down below here, that'd be bearish. We're still in this range, but it's moving down towards this lower end. So we'll see if it ends up breaking below that. If we do, that would be bearish. It could have another decent move down at that point. But overall, and I've said this a number of times, gold has just had a tendency to move sideways as much as possible over the last little bit. It's been very difficult to have a lot of confidence when it's been moving in these directions, because there have been so many times where you've got a bearish reversal candle, it's dropped a day and then gone right back up and whipsawed. A lot of whipsawing movement in gold, and it'd be pretty tricky to trade gold right now. But like I said, if you've been doing it for years and developed an expertise with it, then go for it. But it's just not acting very predictable right now, and so I'd have a tendency to stay away from it as far as trading it. Oil has rebounded a little bit. I talked about oil being a little bit oversold on this drop. We had dipped below this critical resistance area. Today, though, we moved back above it. We'll see if it can hold that. What we're looking at right now was this a correction, just a sharp correction, and then we're heading back up? We had a sharp correction right here, looked like a potential trend reversal, and then it shot right back up, and then it did have this long sideways triangle that it was in for a while, consolidation. Or is this just a bounce? And this was the first move down. This is a bounce, and then we're rolling over and have another move down. We don't know yet. We are breaking out above this resistance today, so we'll see if that holds. I do have my trade in USO. Last Thursday, I told you about that. I got back in, and And so, if we do come back down and drop below here, I'll stop out because obviously it could be in for a bigger drop if it drops below the end. It could be done. That trend could be done. We could be breaking the uptrend at that point if it were to come back down. But so far, again, that it's been producing in the portfolio. We're not making tons of money in the portfolio, but we're making some consistent gains despite these conditions, and that's all you can really ask for. If we can make money from here to the point where we bottom, then we're going to make a killing when it starts to go back up again. The dollar, I talked about this kind of cup with handle potential pattern here on the dollar. It dropped right here. I said we'd like to see it move a little bit more sideways right through here or kind of hold this range. We don't really want to drop down below here because then it's not really a handle at that point. Now you're starting to threaten these lows again, and it becomes a different pattern to look at. So far, we've been able to hold these lows. Yesterday, we got real close again, retested that. Today, we're up. So you can see right here, we're up today. So hopefully we see if you're wanting a strong dollar, if you're bullish on the dollar, you'd want to see it move back towards, and it may not break out. It could just stay within this range for a little while and kind of form that handle. But I would expect it to be a little bit more sideways but we have now established key points here. This is below here is bearish. Above, well, I'm going to say above here, even though because it barely went above there and came back down. But if it can get back above here again, that would be bullish. Could you have another false breakout where it breaks out and comes right back down? Yeah, but usually you don't. Usually the second time it breaks out, it's if it did have a false breakout, usually it's pretty legitimate at that point. So that gives you your range to look for, and that would give you your higher. If you're looking for a higher probability trade, if you are trading the dollar, that would be your range. If it breaks below that, you want to short the dollar, or if it breaks above it, you'd want to buy the dollar if you're trading the dollar. Or if you're looking at a dollar correlation with other trades, if you've got a stock that reacts, that's very tied heavily with the movement of the dollar and moves the way the dollar moves, either with it or inversely, then that would be that you'd want to pay attention to that range there. All right, here we are at the VIX. So we are getting a bullish reversal candle in the VIX. Okay, so that is backing up the fact that we're seeing this bearish reversal in the index, the S&P index. But again, it's not like we're seeing one of these where it's a big showing of increased concern or fear. Now that could happen, if we close at the lows today and we start dropping big tomorrow, you'll see that spike right back up. Now, if you're able to look, the software, the Traders Pro software doesn't pull up the VIX, the VIX, because it's not it's not a tradable instrument in terms of the software. It pulls up the ETF. There's a way you can trade the VIX. It's the VIXY. Now the ETF has different dollar amounts here than the VIX. It's priced a little bit different. It does move with the movement of the VIX, though, so that's why we look at it here on the chart. But if you're able to pull up a VIX chart on another software, or you could, you can just Google it. There's usually a free chart you could probably pull up to look at the VIX. But the key levels that I'm looking at for fear is if the VIX spikes. Well, first of all, if it gets above 30, that means the market is more bearish. It's starting to freak out a little bit, but it's not panicky yet. 40 is going to be the area that I would consider a panic sell-off. And so if you see a really big down day in the market and the VIX is moving above 40, that's what I've been looking for, and that would be kind of that final clue that we're very close to a bottom. Again, maybe not the exact bottom, but very, very close at that point. But we'll watch this again. This was looking a little more corrective. I think I pointed that out last week. Had impulsive. This was looking a little more corrective. Now we're getting this bullish reversal. We'll see if it starts to spike up a little bit. But like I said, so far today, I haven't seen the selling has been pretty orderly, so it may not happen today. But what really is going to be important today is the close. If we close at the lows of the day, that would be very bearish. If we come off the lows, that creates more uncertainty that maybe it's not ready to drop some more or continue to drop, and so that close is going to be pretty important. It doesn't have to be exactly at the lows of the day. It can be off a little bit of the lows of the day. You just don't want to see a big distinct tail. If it's something like this. There's a little tail right there. That's not that big of a deal. Even something like this is not that big of a deal. I don't want to see something like this, or even this would be a little bit suspect coming off the lows like that. I don't want to see something like that at the end of the day today. And it doesn't mean that it wouldn't continue to drop. It just starts to increase a little bit of the uncertainty that it's going to continue to drop, because there were people buying there at the end of the day. You have to ask yourself, why are they buying? You say, well, it could just be short covering. Well, then why are they covering their short if there's a good chance you're going to go lower? That you'd want to hang on to that short. So buying at the end of the day like that when you're bearish wouldn't be something you'd want to see. So that's something we'll pay attention to as well. Chip stocks, SMH. Again, look at the sluggish way it rallied. This is typical of a rally within the downtrend. It tried to move up right here, pulled back. Even on Friday, had that big up day on Friday, but it's all sluggish. And then you get the bearish reversal candle yesterday. We're dropping again today. Now again, sometimes we talk about A, B, C, and then drop, but sometimes it lasts a little bit longer than that. You get just back, a couple zigzags back and forth, and then it drops. Could we still rally again and then drop? Yeah. But that's definitely acting like it wants to continue to go down. Something similar happened right here, kind of a sluggish rally right here, bearish reversal, then it was down again right here, and then it again, that was just a modest drop after that, but it did go lower. It did go to a lower low, and so we're looking to see if this leads to another move lower. Now, because of this chart, it makes me want to get back into the SOXS, the inverse chip ETF that'll go up with the chip stocks go down. So this is one of the tools we've been using to still be long the market, not be shorting stocks, but be long the market, be able to make money when the market's been dropping. I'm going to get back into this now. Because I'm going to get back into this, remember I told you on Thursday, because I got the question, why aren't I getting back into the SOXS and the SARK? And I said, well, because I don't really have anything to hedge in there, and at that time I didn't really feel like the market was flashing any strong bearish reversal pattern just yet. So, and that was in hindsight, that was a smart thing to do. What happened right after Thursday? We had that big rally on Friday, and now we're getting the bearish reversal signs. But because usually I want to use those to just hedge myself, it's allowing me to look out there and see if there's anything else I want to buy. I have USO that it could be hedging, and I'm gonna add another bullish trade in there, so that it allows me to be a little bit to get into maybe a little bit of a riskier bullish position, knowing that if it doesn't work out, if it does work out, it's going to be great for us. If it doesn't, these other trades should offset that loss and then some. It should still actually make us profitable. We'll use tight stops and all that. I'll get over that. I'll go over all that when I get to the portfolio part of the class. All right, so that's looking more bearish. Remember, these are leadership. You want to see strength in the chip stocks. You want to see outperformance in the chip stocks if this rally is going to continue. and we're not seeing that. We're seeing very sluggish movement in the chip stocks on the over the last few days. So that is another reason to be pretty bearish. Same with the transports. Now they had a really strong Friday as well, but again, immediately went into bearish reversal, and it's happening right at this key support resistance level right here. We'll see if that leads to a move down, or if this is just wave A, wave B, wave C, and then we drop. That's a possibility as well. But so far, it's acting like it's still just a correction within the downtrend. And Bitcoin, you can see the same thing. It's, you know, we heard people talk about Bitcoin rallying a little bit, and it has, but look how sluggish that is. And then it's rolled over. Now it hasn't gotten impulsive yet to the downside, but it's acting like it did right here. It just was sideways, and then we got this big drop. It's acting like it's getting ready to make another move down. Now I would say that Bitcoin is the behavior of Bitcoin is getting very close to a major bottom. I'm kind of expecting Bitcoin to bottom before the market does, because we're already starting to see some of those cryptocurrencies go out of business, which would typically what you'd see in a major bottom. Keep in mind that we're focused so much on the market bottoming. Keep in mind that not everything bottoms, not every sector bottoms at the same time. There are going to be sectors out there that are going to bottom and ahead of when the market bottoms. They're going to start rallying, and they could still move in the same direction as the market. So let me kind of illustrate this. So, this is how you can actually have a stock that's trending up, and yet it's moving and the market's trending down, and the individual stock is trending up. How they can move in the same direction each day, but be trending in a different direction. So here's the market trending down. And what could happen is you could say, okay, here's an upward move in the market. Here's the rally within the downtrend in the market right here. Well, this individual stock, let's say it's already moving up, could have a big up day on that move. This was a small up day on the market. This is a big burst of an up day on this individual stock right here. Then the market has a big move down the next day or next couple days, and this stock could have a move down as well, but it's a shorter move down. It's just a step within this upward trend. Then the market has a little bit of a bounce, oversold bounce right here. This has another big rally. So the stock could be moving in the same with the market, which is typically what happens. Most stocks are moving with the market, but it could be trending in a different direction. The point I'm trying to make is that this stock might have already bottomed. This one, the market's not bottoming yet, but there are going to be these sectors. So this could be the panic sell-off right here, this massive panic sell-off. And this stock went down as well, but it didn't go down. Maybe it was a deeper pullback down into here. It sold off as well, but it is already acting like an uptrend. It's already trending up. So that's what I think could happen with Bitcoin. This sell-off right here was pretty panicky. It caused a lot of freaking out. Okay, this is acting like it still has another move down, so it may not be at a bottom just yet. But what we might see is that Bitcoin starts trending up and doing this, where the market and Bitcoin doesn't always move with the market either. I'm not trying to draw that exact correlation, but we'll start to look for that. Do we start to see it trending up, acting like an uptrend before the market starts acting like an uptrend? And not just with Bitcoin. We can look at other sectors as well. Do we start to see I don't know, the retail sector or something has been beat up pretty good? Does it start to, or small, these you could even look at like the ARC Innovation Fund. Kathy Wood's been beat up with her fund trading in these riskier trades. Do we start to see it trending up? With the market still trending down. I mean, a lot of these stocks, these small cap stocks, have been just obliterated. They have had huge. I mean, there's some of these stocks that are down into the $5 range or the $4 range, and they're trying to stay alive. They could start trending up before the market's bottom. All right, let's go over to the portfolio. As you can see, USO is a small position there, and you can see that the account has gone up a little bit, but not by much because I don't have a lot in there. So what I'm going to do is, first of all, I want to add back in the SOXS. Now, I mean, look at that as a bullish pattern right here. Remember, this is short the semiconductors, but remember how that was really sluggish. The rally in the chip stocks were really sluggish. Really looked like we're going to have another move down. Look at this. This is looking very bullish. Breakout move right here. A, B, C, pullback. Now, again, this gets back to last Thursday. You remember I said, I want to get back into this, but this is looking like wave B. I said, that looks like wave A, wave B, and we probably have another move down. There's your move down on Friday, the day after. Bullish reversal day yesterday, continuation of that today. So I'm going to keep a tight stop on this just below these lows right here and see if this can rally up, at least back up to these highs. Let's throw in so what I'm kind of expecting, if you're looking at the SMH would be the chip ETF that I'm bearish on. I'm expecting it to go at least back down to this low, or if not lower. And it may not do that. It could just end up chopping back and forth a little bit. But we'll see if we can if we do drop here, we'll see if we can make a little bit of money on that. So let's go ahead and add that in. Again, I'm going to put my stop right below here, which is 52.50. And where I got that is I just put my mouse on today's, because today had the low on the pullback right here. And I'm going to look over here at the low of the day. Well, actually, it froze right there. So you see 628. The low was $52.57. I want to be a little bit below that. It could be 52.56 if you wanted to. I just went to a round number of 52.50. Again, I don't get too caught up in the exact number, the exact price of the stop. It's just that I want to stop out. I want to stop out below here. Anywhere below there, it means I'm probably wrong, and maybe this thing has further to drop, and I want to be out. I usually don't put exact stops, actual stop loss orders in, unless I'm going to be on a trip or somewhere, somehow unable to watch. Because what can happen sometimes, I usually like to stop out if it closes below this level. And what can happen some days is you might gap down below there and then have a big bullish reversal candle. And you don't want to stop out on that, because that could have been the extreme, and then it's rallying back up again. So what I've identified here is a price level that I'm gonna look to stop out. That's an area that if we close below that, I'm probably wrong and I want to get out. Now, it could gap below there and start dropping even lower, and if that happens, I just go ahead and stop out, because it's probably only going to get worse. The only case here would be if it gapped down, and then after maybe I usually give first 30 minutes of the market day to see if there's any false moves there, or But if it's showing that it could be coming back up, then I might just continue to watch it. Now, by the way, the reason I can do that is because I know I can stop out of trades. I have no problem admitting I'm wrong, and you see me do it. I've stopped out of positions all the time in this portfolio. I don't mind taking a loss especially if I know I'm probably wrong and I need to get out. If you don't have that discipline yet, you can't trust yourself to do it, then don't use that approach. Use an actual order to stop you out. Put an order to sell in right below this level here, because otherwise you're going to be like, oh no, it's below here. I don't want to lose $1,000. Let's hope it goes back up, or maybe it's going to go back up. Well, it's going to go back up eventually. We can't go down forever, and then it ends up being a huge loss, and you get that's where you just obliterate your portfolio. You can't do that. So that's how I typically use my stops. But again, if you haven't developed that discipline yet, you should probably consider putting actual stop loss orders in to kind of make that decision for you. You've already made your decision now, and that'll automatically trigger. You're taking it out of your hands to make the decision. It'll automatically go when it gets down to that level. All right, so let's click on this little blue plus sign up here. We want to add this to the portfolio. Stock specific class, stop price at 52.50. Usually I've been doing about 120 shares. Ooh, I can do more than that. Let's do 170 shares. I'm trying to keep my total transaction price between about 7 to 10,000 per trade. This is going to be real close to 10,000, and then I want my risk per trade portfolio percentage at risk. I want that to usually between 1 to 1.5% is okay. I don't want to be above 1.5%. Or even lower than that, so that's even better. Now, this also tell me if I get stopped out, if I get down to 52.50 and I get stopped out with the size of my trade here, I'm going to lose about $1,000. Now, I better be okay with that. If I'm not, if that's too much, if you say maybe 500, but I can't handle 1,000, okay. If it's 500 is your level that you could handle, then you're going to have to do half these shares. You're going to do 80 shares or somewhere in that range, something like that, 85 shares. Okay. You do have to manage this. So these are my parameters, and they're actually pretty. I'm assuming that with a $100,000 account, which is what we started with, that $1,000 risk is probably, for most people that have that size of account would probably be okay. They're probably not too freaked out by it. But if it is, then it's critically important you reduce that risk amount down to a level you can handle. Because otherwise, you're going to make emotional decisions. You're like, that is very painful to lose $1,000. And so you're not going to want to lose $1,000 if you're wrong, and you're going to be wrong at times. And so you're going to have $1,000 loss at some point in time. So you get that down. Maybe it's only $300 that you can handle. Okay, then adjust it. Adjust this down to a level that you can manage, where it's not going to cause us so much pain. Because like I said, it's going to happen. You're going to get stopped out of trades. Let's go ahead and purchase this. Now I'm also going to consider adding the SARC. This is the short of the ARC Innovation Fund. This is looking to me like a kind of a larger bullish ABC pattern. Nice little up move right here. I'm going to put my stop right below here, so I have very tight risk. I'm wrong. I don't lose very much. If this thing gets back up in this area here, I'm going to make a lot more money than I'll lose. Let me just go ahead and do that real quick. and then I'll show you what I'm going to add, another regular long position. Remember, these are short positions, not that we're shorting them, but they will go up if these indexes go down. And that allows us to still be long the stock, but actually benefit when the market drops or these stocks drop. So I'm going to go ahead and add this stock-specific class portfolio. My stop price is going to be below that low down here. And I already looked at what that was. So that was at $55.80. I did 150 shares. Yeah, I mean, very little risk. I have about 9,000 to trade, and below 1.5% portfolio risk. I'd only lose almost 700 if I get stopped out. Let's go ahead and purchase that. All right, then I went to the watch list. I went through and I wanted to look at, is there, now what I was actually looking for is because a lot of these stocks, a lot of everything is going to be, remember oil was really outperforming, and we did pretty well during the drop with oil and those defense stocks like Northrop Grumman and Lockheed Martin and some of those. Well, I mostly just had, I think I just had the Northrop Grumman trade. But oil has shown that it's breaking down a little bit, so I really don't want to be jumping into. I don't want to be overweight oil right now, the way it's been acting, especially a lot of the individual oil stocks. But I started to look through our list here, and one of the areas I said that you could make a fundamental argument that these stocks have to. It's hard not to find a reason why they wouldn't go up in this environment we're in right now. And those were the agricultural stocks. You're taking a major wheat player out of the market with the war in Ukraine. There's really, especially those African countries are really freaking out. It has the supplies haven't been used up yet. So they've been able to get their wheat, but at some point, it's going to be a crisis. I don't see how you get away from that, and that's not something that gets solved immediately. Talk about growing seasons. It's not like you can, especially you get into winter. There's very few people that can grow during the winter. The argument has been, well, we've seen soybeans drop and some corn has been dropping. Some of these commodities have been dropping. But what's going to happen eventually, because the wheat demand is going to be there, these farmers are going to use some of that land to grow wheat. We saw it happen back in when the oil crisis hit back in 2007, and oil was even higher than it is today. There was a push towards ethanol. Oh, ethanol could be the solution. It could be the alternative fuel. And so so the corn prices started to really take off, and farmers were, instead of growing wheat and some of these other agricultural products, they were growing corn because that's where the money was. Now, the problem at the time was there's just not enough land on the planet to replace oil with ethanol. You can't grow enough corn to replace the demand for oil in the world with ethanol. But that short-term demand, that's what happened, is they shifted those farmers. I mean, they're going to go where the money is. What is going to go up in price? Well, the wheat. They're going to start growing wheat, and that is going to cause foreign prices to go back up eventually, because there's going to be less fields that are growing corn and more that are growing wheat because of that. They're trying to replace that world demand. Now, again, I'm not trying to be a fundamental trader here, because that's not what I am. But what I want to do with this trade I want to add to the portfolio is I want to get into something that is has some very high reward potential with very little risk. but I also am throwing that in there because that's just what I've been thinking about. Is I don't know how these stocks aren't going to go up, take off, and those fertilizers companies that are going to be, going to need fertilizer. Eventually, John Deere is likely. They're going to need equipment, and that kind of stuff as well. So anyway, let me pull up a chart here just a second. Here, let me grab a question here. Question would it be less of a risk to buy UVXY versus SARC or SOX? There's a lot of different things you could get into if you wanted to. This is just my game plan, and that's I'm not expecting everyone to do exactly what I'm doing. Put it this way, I don't go out there and look to follow somebody else because I know what I like to look for. I like certain charts, and I get kind of focused on my way, my favorites to trade. And at least right now, my favorites have been to trade the SOXS and the SARK anytime I think the market is likely to drop. If there's other patterns that you find that you like and want to trade, you could do that. I tend to stay away from the VIX trades because remember the VIX. The problem with the VIX is that it is when you trade the VIX, you're trading a derivative of a derivative. The VIX is a derivative. It's kind of like, if you can't do this, okay, but if you could, let's say hold on here, let me pull up, or let me draw here on the screen. Let's say, we'll just call it XYZ stock. Let's say XYZ stock looked like it can go up. And let's say it was currently at $50 a share. You think it could go up to $60 a share, or something like that. You could go out and buy the $50 call option, and let's say the $50 call option was going for $1.50 or something. Let's take a random number there. That's a derivative. You're trading an option, it's a derivative. What that means is your value is derived from something else. My call option is going to go up in value because the stock went up in value. Now, let's say that you could actually buy a call option on the call option. There's a secondary call option right here, and I don't even know how that would look, but let's say that this is going to go up in value if the call option goes up in value, which is going to go up if the stock goes up in value. The problem with an instrument like that is there is no intrinsic value. There's no, right here, if the stock goes up to $60, that call option would have to be worth at least $10 because you could exercise it and make. It has intrinsic, it has value. It has value that it is there. It's real. If you're looking at a derivative of a derivative, you're expecting the derivative to there is no intrinsic value in that trade, and so you could. In other words, what can happen in those types of trades is you could have the VIX move up, and your option on the VIX or your trade on the VIX not move up at all, or not move up very much. It happens all the time, especially on those VIX ETFs where it's like the VIX moved, but the ETF barely moved, or it I don't know. It's just, it gets really tricky, and I know a lot of people are trading VIX ETFs right now. Just wait until something happens where they really get wacky and they implode, or it's a pretty risky trading instrument. So I feel a little bit better with trading ones that I understand the value of a little bit better. So anyway, that's my spiel on that question there. But I get back to trade whatever you want. If you have something inverse that'll go up in value when the market goes down in value, you can trade. Although there are some very illiquid ones out there that you have to be a little bit careful of. All right. So anyway, I'm going through my watch list, and I was looking at ADM, Archer Daniels Midland. This is a big commodities company. They have huge agricultural operations. And it's not just because of that fundamental argument I just got done making. Look at the 2-year chart of ADM. You had this big run up when the Ukraine war kicked off, and before it kicked off, you had this big run up. Since then, you've had this what looks like a gigantic ABC pullback. Now, one of the things I look for in ABC patterns is that usually they're complete when wave C is about the same length as wave A. Wave C looks about the same length as this wave A. It doesn't have to be exact, but it has pretty good proportion there. I also like to look at if there is some previous support or resistance in the area. Look at significant resistance back in here, a little bit of support there. A little bit of resistance here that could be support it's hitting right now. So here's a huge uptrend, and this is the pullback. Looks like a huge pullback within the uptrend. Now again, there are plenty of what look like ABC patterns that don't end up being ABC patterns. This thing could continue to just drop. Okay, but the idea here is that if I get in now with a little bit of this rally, we'll look at the rally here in just a second. I'll zoom in, and I get a stop down below here. This is where I know I'm probably wrong. I don't lose very much if I'm wrong, but I have the potential to make a ton. Just getting back to the previous high, I can make a ton if I'm right. And if demand really is going crazy, it should get above that high and go even nuttier at that point. If it's not, and it's demand is there, but it's not huge demand, and they solve the problem somehow. They have some invention that we don't know about that can grow wheat 5 times faster than the normal cycle, and who knows. It still could rally a little bit off of that, and I could still make money off of that. And like I said, I got to be willing to lose this if I'm wrong. And I don't want to make the mistake of just getting in because it's down so much. Okay, that's not the purpose here. It's based off of the larger understanding how trends behave, and that looks like an ABC pattern right there. Now, when we zoom in, I'm going to throw some volume bars on there. Look at the volume. So we had this big down candle right here. That was Thursday, and then look at this bullish reversal candle on Friday. Look at the volume. Let's see if I can back out to that 2-year chart again and see if that volume stands out a little bit. Look at the volume on that. The highest volume we've seen in months. We also had a huge volume on this drop. So it tells me that this is showing exhaustive selling and someone thinking that's far enough and they're coming in and buying. Again, that may not be the case, but that's why I'm gonna manage the risk. I'll put a stop down below here with that huge volume day right there. If we drop below there, all those buyers are going to be sellers and this thing's going to drop. So that's where I know I'm probably wrong. I don't love the candle today. It's a little bit of a bearish candle today, but this can be very short term. It could just mean it pulls back into here. And who knows, maybe we get a big sell off here and this pushes lower again. Okay, I'll get stopped out of that, but that's why I've got those other 2 trades. Those should go up and go up in value and offset any losses that this gives me. But if this holds up and this is the bottom and it maybe comes back to retest the bottom and then goes higher, that again, that reward potential versus the risk is pretty dramatic. And again, you say, I don't like ADM, but I think I want to get into another fertilizer stock, or you've got another favorite, go for it. Again, I'm not, I don't believe in perfect trades, just so you know. I don't believe, I just long ago, I'm not looking for perfection, because I have found charts that were absolutely perfect that I thought, man, this thing is guaranteed to go up. This is the most beautiful chart there is. In fact, it is so beautiful, I use it as an example in classes because it was textbook. It was exactly what I'm trying to look for. And then it fails, you know. And then I've had patterns where it was like, it's a little bit, it's kind of behaving like an uptrend, but it's really not real clear and distinct. And then you get a big upward move off of it. So these stocks I go over in class are not meant to be the magic stock out there. I found out of the thousands of stocks, I found the golden stock that's going to make everyone billionaires, you know. No, I found a stock. And what I'm hoping is, like I mentioned earlier about market breadth, I'm hoping it's one of those 500 stocks out of 1,000 that's going to go up. And it has the characteristics that should cause it to go up. And so I'm assuming that it will do that. So I'm gonna buy into this, put my stop down below here. My stop, I used yesterday or Friday's low, which was 71.55. I put it at 71.50. So I'm just down below here. Now, again, if we want to switch this over to signals, this has a red sell signal. This is going to be based off of this deeper pullback right here. But look, this is still a high strength rank stock. It's still near a 90 strength rank. So it's not like I'm getting a deep pullback on a 20 strength rank stock. This stock it still has that higher strength rank to it. Now, again, and if you're going to, could you wait for it to say, well, you know, I don't want to buy anything in this environment? Because remember, this is tying in to the SOXS and SARK trades. I want them to be able to hedge something. I want to be able to now get into another bullish trade, and those could hedge it if we continue to move lower. Or if not, I'm positioned very well, and I got in at a good entry on this, and could make a killing on it if it starts moving up pretty dramatically. So that's kind of, but you could wait for this to go back to hold and back to buy. It's probably going to hit a buy signal probably right in here, and it could still have a massive move off of that. So I don't want to diminish waiting for it to go to a buy signal as confirmation. As I talk about all the time, you got to make a decision at some point. How much confirmation are you looking for? In this case, I'm not looking for very much confirmation, but what I'll benefit from is the reward to risk. I won't lose very much if I'm wrong. I'll make a killing if I'm right. All right, so let's add this. Put my stop in at 71.50. Let's see what 100 shares looks like. 100 shares would be about 7,000. We could probably bump that up to 120 shares would be right at 9,000. Let's look at portfolio at risk. Look at that. Because of that tight stop there, I'd only lose 500, a little over 500 bucks if I'm wrong. And that should be made up by, if the market drops, by those other trades going up in value. So I'm going to go ahead and purchase that. we're still mostly in cash. We'll see how this plays out. We'll revisit that on Thursday and see how those decisions, whether they were right, whether they helped us or not. We'll see. Let me just double check real quick where the S&P is. We're in the last hour of the market. Let's see if we've come off the lows at all. No, we're right at the lows of the day. So far that's looking, and here's that kind of that trend line. If we get below that, that's going to be pretty bearish going into tomorrow. All right. That's all I have. Have a great week, everyone. We'll see you on Thursday for the stock specific class. Bye now.